Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with another TA Tuesday. But first, remember, none of this is tax, legal, financial investment advice. It's your buddy, G Dinero, helping you increase your financial literacy to put you and your family on that path to financial freedom. So with no further ado, let's jump right in. All right, today we're going to start a little bit differently. We're going to start with the TABI model. It's a Invest Answers model, the TABI model, to take a quick look at Bitcoin to see where is it on the TABI model. And you'll see right now we are in the yellow zone. You can see that on the chart pretty blatantly. I overlay my TABI behind the price action. Instead of having it in its own little line, squiggly line, I make it I think it's called an area graph or a histograph. You'll see that it was blue down here where we were at the lows of the market. That's back in late 2022, early 2023. When Bitcoin bottomed out down there around 15,600, if I remember, 15,500, that was where it was blue. We went through the green zone. So blue and green, that's accumulation zone. Yellow is pump the brake zone. Orange is it's starting to get overheated. Then it'll go through other colors of orange. It'll go into this dark orange and these red colors that you see back here, dark orange and red. That's back in 2021, but again, we're nowhere near that right now. We're in the yellow zone. Again, you can see that we bounced off the 1 year moving average almost perfectly right here back at the beginning of April, or end of the first week of April, I should say. The Meyer multiple went over 2 back at the end of last year, but since then has just been trickling downward. Same thing with the MVRV score, MVRVZ score. If you don't know what those are, go follow somebody who does on-chain analysis. But those are important to know when Bitcoin is overheated and when it's not. Right now, not overheated. So we're going to go into the daily chart next. This is Bitcoin on the daily chart, looking at the last 1 year of price action. It's almost been exactly 1 year since the last halving. The halving, I think, was on the 10th or 11th of April of last year. So we're a little over 1 year out of the halving. The price is starting to come back up to the 200-day moving average. 200-day moving average. You see us battling with that right here. I like the daily to look at VRVP, and you can see the gap that we were talking about. That's this gap right here where there was not a lot of volume before. It's starting to fill in. In particular, you'll note that it filled in nicely right around between $76,000 and $77,000. That's from the volume that took place right here in those couple of days that we spent touching the 1 year moving average, You'll also note that we are starting to break out of this short-term linear regression channel, and you'll see that a little bit more on the 4-hour chart. Mean reversion's neutral, RSI is a little bit overheated, and MACD is right there at neutral. All right, next you'll see here, this is the 4-hour chart on Bitcoin. So we're looking at the same data, just sliced differently, let's say. I put a yellow box in here to show that we basically traded sideways right on the 50-day moving average from, the 11th or 12th of April, all the way up until Sunday, this last Sunday, the 20th, when we finally broke out of this rectangle that you see here, this yellow rectangle. We went up, retested the 200-day moving average, and now we're starting to sit on top of it. So last Tuesday, I was saying we'd probably trade between the 50-day, if we could hold that as support, and the 200-day moving average would act as resistance. Well, a week later, it has acted as resistance, the 200-day moving average. Right now, we're starting to get a little bit overheated on the mean reversion tool. RSI is over 70. Over 70 is usually a sign of being overbought, meaning it may start to sell off soon. Same thing with the MACD. MACD is in a positive zone, although we haven't seen a crossover here yet. Okay, so what do I see as the areas of resistance? Next one up is the 89,300 level. $89,300. That's that 78.6% fib level that you see me kind of highlighting right here. That will present our next level of resistance with a very strong support and resistance level at 91.5. You'll note that the 100-day is just below that at like 91. So really between 89 we'll call her 89,300, and 91,500. This zone is going to take a while for us to break through right here. I'm just kind of highlighting the entire zone, right? Once we get back up above that, what I see is a retest likely happening of that 91.5. We turn resistance into support, and at that rate, we hopefully go off to the races. I know hope's not a strategy, but again, with the global money flow starting to come in, with that liquidity coming in, there seems to be about a, we used to look at it and say a 70 to 80 day lag. Now it's closer to 100 to 110 day lag. If all that holds up, then we should see this starting to take off even more over the next week. So a week from now, I anticipate we're testing these zones right here between 80, right where the 200 day is, call it 89,000 and 91,500. We're somewhere in this zone over the next week, testing these levels, getting ready for blast off. Solana Bitcoin did bottom last Tuesday. We had seen that it was looking like it was going to bottom. It did indeed bottom. We are now slightly mean reverted to the upside, but really flat more than anything. It's looking like this 0.0015 is the floor for Solana. I know we did wick down below that, but it seems to keep coming back to this exact level. You'll note that we've really traded sideways since the end of February. So for 2 months straight, we've been in the same zone. We wicked up one time, wicked down another time, but other than that, we've been in the same exact zone. What does that tell you? Bitcoin is strong when compared to Solana. It's keeping that Solana price is slightly down, whereas Bitcoin's is flat, basically. And when I say slightly down, Solana's down more than Bitcoin this year, right? That's kind of a fact. You can notice that on the next chart, right? Here's the Bitcoin chart on a 4-hour. You go over to the Solana chart and you notice we are way down from that all-time high of 295 that we hit back on Inauguration Day. So now we're on the Solana one-day chart. Let me fix this linear regression channel. Need to increase the period just by a little bit just to make sure we're capturing from the high all the way to where we are now. You'll note that we are starting to break out of the linear regression channel just a little bit right here. We're coming up against significant resistance. Significant resistance is at 140, all the way from about 140 till about 150. So that $10 range is where the vast majority of tokens have exchanged hands in the last 1 year. So we're looking at 1 year on VRVP, and you see this giant point coming out right here. That's going to take a while to work through. Okay, it's not like it just happens overnight and all of a sudden we're through that. That takes a while to work through. Once we get on the top side of it, you'll notice significantly less volume from the 50% fib level and up. So from here, like what I just circled here in this pink, very low volume, not very low, relatively speaking, low volume, not that selling pressure that we see right here, right around 140 to 150. Once we break through that and the buyers get back into control, I see this taking off. But again, we do need to break through that level. We're relatively neutral on mean reversion here. Same thing with RSI, slightly overheated to the upside. If we go into the 4-hour chart, what you'll see here is since last Tuesday we were battling with the 50-day moving average. And I said, we need to break through that and turn it into support. Well, we rejected off of it Tuesday into Wednesday and regained it on Wednesday into Thursday, retested it as support, and haven't looked back since. So that's a bullish sign that we did not break back down below the 50. We're starting to take off from there. So indeed, it looks like the bottom was this 95. I can't even believe that an asset that in January was at 295 had dropped all the way down to 95 3 months later in April of this year, right? Absolutely crazy that it did so. What are the next levels of, so support right now is that 50-day moving average, which is currently right around 128. That would be the first level of support. Next level of support down is this 118 to 120 zone that we've been turning around at, either using it as resistance or support, depending on whether we were above or below it. And to the upside, it's this 140 to 150 range. Remember, we said we're going to do battle with this range for a while. If you look back, it makes sense Because if you look back, we have spent a lot of time in this zone. Going all the way back to March a year ago, we were hitting this 140 zone. We broke above and below it. Basically, it's been that line in the sand. This 140 to 150 has been the line in the sand. Yes, we spiked above it starting in October of last year, all the way until February of this year. And now we've been relatively below it ever since. So we've got to get back up over that 50% Fibonacci level, which is right around 150, 150 to be exact. Next level up above that is the 100-day moving average, which is at 164. And then we have the 200-day that's all the way up at 180. So we've got work to do still with Solana. I look at it as opportunity, not necessarily just work. Tesla on the daily chart. You'll note that we are just in a steady downtrend. The trend has not flipped. It's still orange. If you look at over the last year, 1 year ago, we were bottoming out. On April 22nd, 2024, we were basically bottoming out down at 135 to 140. 135 to 140 1 year ago today, right? Now, we're sitting up here at this 230 waiting on earnings today, and a lot of people think it's not going to be a favorable earnings. Others are thinking maybe this is the catalyst that starts to send Tesla back up again. I think it's going to be relatively neutral. I think it's going to be a relatively mute point with Tesla continuing to trickle down a bit afterwards. You'll note that there is a ton of volume. We are literally at the point of control for the last year. Point of control is where the most volume has exchanged hands. That's here at around 250, and we're 230 in pre-market. So when I say we're right here, we keep battling with that 250 range. It's going to take a while to work through that volume. It's not just going to happen overnight. It's not going to all of a sudden explode to the upside unless all of a sudden they say they produced 50,000 Optimus robots in the earnings report today, which I doubt is going to happen. Support to the downside, you'll see there's a lot of volume. This 220 level seems to be rock solid. If that were to break down, we've got some support down here around 195 to 197, and then finally down around that 175 to 180 level. I can't believe we talk about levels that low, but we were there not that long ago. You'll note in the linear regression channel, the long-term one, that's the one that you see. Here's the upper bounds of it here. Here's the lower bounds of it here, and here's the midpoint of it here. It's a faint green line. It's a little bit hard to see on this video, but you'll note we're in the bottom half right now of the long-term linear regression channel, and as I zoom into it, you'll note that we are in the middle of the short-term linear regression channel. We basically just rejected off the 200-day moving average. We've since pulled back. Here's earnings. Yes, I still have that quote kill zone on my chart right there. And you'll note, whoops, let me get rid of the drawing tool for a moment. And you'll note that I was being optimistic that we could hit this level on April 22nd again and turn around and get us some inexpensive Tesla. I know a lot of people want it to just be mooning right now. I'm still in the loading the boat phase with Tesla, but I don't think it's going to get that low. I'd said all along, if we get down into this box, I'm a buyer. If we get to the midpoint of the box, which is about where this 10/23/24 low is, the October 23rd low, that's the midpoint of the box that I start buying more. And if we get anywhere near the bottom of the box, I'm backing up the boat, right? Or backing up the truck, whatever the expression is. But we didn't make it down that far. We are tending to find support. We've bottomed 1, 2, 3, and looking like almost 4 times right here at this 215 to 220 level. So that seems to be the value range right now. We are overheated, meaning oversold, which means we're seeing buying signals on the mean reversion. We are below 50 on the RSI. MACD does look like it's starting to turn up. All those are favorable buying signals. We haven't gotten an actual buy signal. We're kind of in the middle of the confluence range. So there's mixed signals right now on Tesla. It's not something I'm going to YOLO in and go make a huge buy on right now. But again, anything down here in this 215 range, that seems to be the bottom right now. Going down below that, next level of support, like we talked about, is around 195. And then below that is this very strong support down at 170 to 175 with that yellow line angling up. To the upside, we need to break out of this short-term linear regression channel that we've been battling with. You notice it's starting to come down to where the 38.2% level is, which is right at about 250, 249, 250. That is our resistance on the way up. That's where the most number of shares have exchanged hands over the last year, is at 250. So it's not like we're just going to break right through it. There are people that bought it at 250 a year ago, and they're happy to turn around, or a little less than a year ago, and they're happy to turn around and sell their shares back to you at break even. They just don't want to be in a loss. So that's the psychology behind it. That's why when you see large areas of volume, you'll see that those areas will sell off. Next up is around 275, and then right above that is 290. That's where the 50, 200, and then we've got that 50% fib level at 295, just below 300. So 290 to 300 is going to be the next really strong level of resistance. Right now, that 250 level is the resistance for us on Tesla. MicroStrategy 1-year chart. Just the one thing I wanted to point out here is we are in this the top part of this downward sloping linear regression channel since the all-time high on November 21st. If you look at the volume profile down the side, large amount of volume here at 254. So that's pretty much the floor right now, congruent with the 200-day moving average. So that would be the lowest I could see us going with MicroStrategy. I'm not saying it's going there, but that would be the floor right now. Next level up of support would be the middle of this linear regression channel around 270. You'll see that that's also a Fibonacci level, 280 over on the other chart that I'm about to show you. 295, another area of volume right here. And then there's the giant amount of volume, which is between 325, let's say, and 345. So 345 is going to be a wall of resistance. There's just a lot of people that bought shares there, and we've got to churn through that volume. Then next up is around 390 to 400 is where that next big bunch of volume is. You can see it a little bit more clearly here. This is the last 1 year on a 4-hour chart for MicroStrategy. Here's the long-term linear regression channel. We're back up above the halfway point of that. See, that's this sloping green line that I'm tracing right here, this faint green line that I'm tracing. We are sitting on top of it again right now. We've regained the midpoint of that since last Tuesday. Last Tuesday, remember I said our resistance levels were going to be the 100-day moving average first, then the top edge of this downward sloping short-term linear regression channel, and then 345 was going to be rock solid resistance, just like it was back here, like we talked about a few weeks ago. I said, we're not just going to blast right through 345. It's not going to happen, no matter what anybody thinks. Sure enough, we've come back to the midpoint of this long-term linear regression channel. We basically just sat on it all last week. Spiked up yesterday exactly to the 100-day moving average at 330, as expected, and rejected off of that. Today we're making another run at it. Remember, if we break through that, which is pretty much at the same level as the edge of this linear regression channel, next up's at 345 level. Super strong level of support. Above that, we've got some at 380. We've got a bit of volume there that we have to churn through all the way up to 400. So 380 to 400 would be the next level of resistance, and then above that, it's around 435. To the downside, remember, supports the 50-day move. First part is the middle of this channel right here, right around 311. Then the 50-day, which is at 296, and then this 50% fib level at 280. I did say that the 200-day moving average would be literally the floor, in my opinion. I don't see us going that low, though. Really, 280, anything at 280 right now is the low for MicroStrategy. And last, because I've been asked about it and because I took a position in it a couple of weeks ago, we have NVDA. NVDA has been in this long-term linear regression channel. This is on a 4-hour chart. Long-term linear regression channel all the way up until here on March 11th. We dipped below it, regained back into the channel, and have not seen the inside of the channel since March 27th. So it's been about a month now that we've been below it. It's while all the tariff fears are going on, while all the chip wars are going on, right? Let me increase this just a little bit to get it so that it's still in the zone. We are in the middle to lower part of the short-term linear regression channel. Ever since we hit an all-time high on January 6th, we've just been going down ever since. Notice that we've been respecting the upper bounds of this channel pretty well. We didn't quite make it to the upper bounds with this move to the upside. The last move to the upside almost got us back into the long-term linear regression channel. We rejected off. And we're finding support down here at this August 5th low, which is around 90 bucks. Yes, we wicked below it, but support to the downside is down here at around 82, a little over $82 a share, as well as around 90 because that's where that August 5th low was. Then also we've got support here at the 61.8% fib level, which is at $99. So this should be the strong level of support and or resistance at 99 bucks for NVIDIA. We drop below that, it's 90, and below that, it's 82. We are mean reverted to the downside, which is typically a buying signal, especially if we mean revert over 2 standard deviations like we did on April 7th when we wicked all the way down here. And resistance to the upside is going to be trying to break out of this short-term linear regression channel, which is right around 115, 116. We've got to make our way back up into the long-term one, which is around 117, 118. And then finally, this 125 level, 123 level with the 78.6% fib level, that's presenting a challenge because you notice we rejected off of it here and here. So we rejected twice off of that 122 to 124 level. That's going to be the resistance on the way back up. Good things over perhaps the next few years with NVIDIA, but in the short term, there's going to be some turbulence as we work through all these China tariffs and fears along the way. All right, guys, I know that was a long one, right? That was a long one. Holy smokes. If you like what you see, make sure you hit the like button. Make sure you comment below. What did you like best? What did you learn from today? What would you like to see more of, right? Make sure you're subscribed to the channel so you don't miss any of these or other videos like mine so that you can continue to increase your financial literacy. Book a course with me. You'll learn TradingView, technical analysis like a pro. You'll understand how to trade options that way. And then you'll be ready for an individual appointment if indeed you need one where we can go in and actually develop a strategy that works for you. So here's to you increasing your financial literacy to help set you and your family on that path to financial freedom. Have a wonderful rest of your Tuesday. We'll see you next time.